All right, we're 4:15.
Okay, let's do it.
Let's get to it. Motivated. All right. All right, everybody. Thanks for joining us on this Friday afternoon. Uh, Ben and I were talking before this. It's a bit of a, it seems like a bit of a weird week. I just feel like I've been grinding it out all week.
Yep.
Not nothing too crazy, but like when you move houses and you put all that work in to move and you finally get everything in, right? You got all the boxes and you finally go to exhale and you just look around. There's all these boxes now. Right now you're like, oh, I gotta unpack all these boxes. That's how I feel about where we're at in our move to
Yes.
NBF, right? Like
Yeah.
everybody's in, everybody's accounts are open, all that stuff. Now we got all the paperwork to do.
Yeah. Now we gotta make sure all the I's are dotted and T's are crossed.
That's exactly right, which is a
Yeah.
huge job. So that's
Huge
kind of
job
where I'm
for
at,
sure. Yeah,
just
absolutely.
grinding away. So
Yep.
not a lot of housekeeping issues today, but that I can think of. But so we may as well just jump right into it.
Yep. Yeah, we're still
Uh, Go ahead.
Yeah, no, we're still working through some of the tax stuff, and if you don't have anything, if you're missing something, or you're looking for any conversation or questions around taxes, still haven't. I've had lots of those conversations the past, I'd say, couple of weeks. So we're still plugging through what we can there and helping where we can. And there is still appreciate you sending me the notes when you see there's still money in the accounts at CIBC, and we're still sweeping those, and those are coming in ad hoc throughout the week. And so continue to do that if you see something there, and we'll continue to pull it in.
Good point, Ben.
Yeah.
That's a
Yes.
great point.
Thanks.
That's a great
Yes.
point.
Yeah.
Well, in other news, 10-year treasury yields, another big jump.
Yeah.
Let's get right into it.
Yeah. Okay. Yeah. So look, I mean, I've been talking about yields for a long time. Obviously, my daily today said I think we're getting close to the top end. As I look at the different uh, points and the different potential breakout points, we had an interesting setup this week where we had the Nasdaq, which had been trending bullish for the last couple of years, kind of move from that upward trending bias to a neutral bias for the first time in multiple years. So maybe it was just coincidence, but in March of 2000, we had the kind of exact same setup. Yields were rising, tech rolled over, and I'm hopeful we don't have that same kind of March 2000 setup that we had, but very eerie that we got a similar setup. So so with tech going neutral, I did take some action and reduce any exposure to tech as much as I could, which was XLK, QQQ, Apple, Facebook, some of those names. So I was active there trying to reduce some exposure on tech. So I know that wasn't the specific question you asked, but the 10-year, of course, has been creeping up ever since. And so now we hit kind of 1.63, I think. Let me just see where we closed the day out on the US 10-year. So we're looking at 1.626 on the US 10-year. So if we're looking from a trend perspective, the kind of the top end and the worst, I think potential is that number could get up to 190 on the 10-year. I don't think it does, but it certainly could. I'm starting to think, though, that maybe we're starting to see some early inklings of that phase transition from the growth and inflation, which is that kind of quad two setup where you have financials, commodities, consumer discretionary. Those things tend to do quite well. Tech typically does well at this point of the cycle, but maybe it's signaling us now that we're starting to transition and go into that next phase.
Okay.
Yeah. So, and just as a reminder, what that next phase is, and that next phase is, which is kind of that Q2, that quad two, which is slowing growth and slowing inflation. And so it's not an absolute number, it's the direction, the change of direction of that number, right? So if we go from 2.6% growth to 2.4% growth, that's a negative rate of change. So same with inflation. If we go from 2% inflation to 1.7, if you combine those two, you tend to get a pretty nasty equity setup, but you tend to get really strong rallies in US dollar, gold, and treasuries.
Right.
Yeah.
Just before we move on, if anybody has any questions, it's always good to put them in the chat or the Q&A, or raise your hand, and you can do a voice question at the end as well. I always forget to mention that. And that's all located at the bottom. If you hover over with the video, all the different tools should be there for you. Or for some people, I think it's on the right-hand side as well. Interest rates climbing.
Yep. Yeah, so I think it's climbing, and that's typical for this part of the cycle. And so I think right now what we're seeing is you're seeing continued pressure on the consumer. And yeah, people asked me a couple of times this week, what do you think about what Chairman Powell said? And I think he said nothing. I think he doesn't know what to do unless he's in panic mode. So when he gets into these environments where things are kind of moderate, he tends to say something like, everything's fine, we're on cruise control, until the market panics. And then when the market panics, he starts to do something. So they didn't talk too much, but there's the kind of the two schools of thought, which is the yield curve control, where they flatten it straight across. And the other school of thought is the Operation Twist, which is what Bernanke did before, which was sell short-term bonds and buy long-term bonds to try to bring down the long end of the curve. So I think both of those options are probably on the table right now. But there's no doubt that this is putting pressure on the consumer. We've seen the mortgage rates move up in the US to the highest level since last summer. So that's putting pressure on the consumer. So I think we're gonna see this play out. I don't think it's immediate, but we're gonna see that play out over the next couple of months.
Oh, for sure.
Yeah.
Yeah, from a Main Street view, you got to think of, how over leveraged people are, mostly in their mortgages, and how move in interest rates you know, could burst that bubble, especially here in Ottawa, right? We have, I guess it's not just in Ottawa, but we really noticed it, the housing bubble. I mean, the housing prices just keep going up, but people are just more and more over leveraged. So a move up in interest rates should, we'll see where people are at after that.
Yeah, for sure. I mean, I looked at it this week for the US. For Ottawa, it's a good question, but I know in the US that move has reduced your purchasing power by about $24,000. So it's not insignificant. And I'd say you probably got a similar number to come in Canada. Rates have been slower to move in Canada. We got the Canadian 10-year now at 158. So the US moved. So a week ago, that was inverse. You had 150 in the US and 140 in Canada. So, you started to see those start to move in slightly different directions. But yeah, Canada rates are starting to come up too.
Right.
Yeah. So just this is a reminder, just before we jump onto that, though, I got questions oftentimes. They say, well, why would you buy bonds, at 1.6? That doesn't sound like an attractive number. But, if you look at a 10-year bond and you buy something that pays 1.6%, if you get equity markets selling off, and that rate moves from, we'll say, 1.6 to 1, you probably get somewhere around a 30-40% capital gain from owning that position. So there's always a reason to think about it and look at it and pay attention to it. And so it's not just the absolute number, that 1.6. You also have to think about like when that matures and that duration risk you can benefit from putting into a portfolio.
Sure, makes sense.
Yeah,
makes sense. Well, with the exception of driving all around the Ottawa Valley this week, visiting clients safely. Safely.
Yes.
What else have you been doing, Ben, for the portfolios?
Yeah, so really more than anything, it was reducing the exposure to tech. I did add a couple things. Bought a little bit of Russia. Bought a company called Gildan Activewear. That's a Canadian company. EXPC, which is one of the SPACs I've been talking about for a while. It was beat up and bought it, I guess, 3 times. Bought it twice last week and once this week. So that's worked out pretty well so far. The other one was IWO, which I bought and sold, which was US small cap growth. So it was a quieter week from an activity perspective, and it's more of a watch and wait. And really, I don't think we're quite in that transition yet, but we're starting to see some, I'd say, some yellow lights, some reason to pay attention. And so as a result of that, it got me to sit up and much more reading and watching. So I'd say that, the other thing which we talked about is this is learning time right now, right? This is the research phase of the cycle for me, where I got a conference next week where there's 4 or 5 speakers that I want to listen to. The following week, we got the crypto conference that I attended last year as well. So that's a couple of days. And then we got John Malden's conference coming up as well soon. I think that's in April. So we're kind of into that cycle where there's a lot of information coming in, a lot of research, a lot of things to pay attention to. And start of the year as we transition to the economy starting to open, because there's no doubt people are coming back. Travel's going to start to come back. Looked at, duty free, for example, as a company that's worth considering. All these things are starting to come back. So we're in that kind of transition phase, and so in pretty deep study phase right now.
Yeah. Before we get on to what's going on next week, we should talk a little bit about the podcast that we filmed last night. Now, let me tell you, Ben is never afraid to jump in the weeds with anybody when talking about investments. And we had a guest on last night to talk about options.
Yeah.
Ryan Marr from, where was he from again? What was the
Waypoint Wealth Partners?
Waypoint.
Yeah.
Waypoint Wealth Partners. Just talk about options, and this guy was high level. So if you want to watch next week's podcast, have a nap first, because you're gonna need some serious focus for that one. I don't know if you want to talk a little bit about that.
Yeah, sure. I mean, I was hoping we could have pinned him down a little bit and overly simplify it, but we didn't quite get there. I'm hoping there's some value added that people can see, and I think he did a pretty decent job of comparing the selling insurance versus buying insurance, and kind of break it down from that perspective, where I've always been the one as well that I want to buy the insurance. That's why we've bought the puts, and we've run with that kind of put strategy for protection within portfolios. But I tried to have a pretty wide ranging conversation to talk about how an option works. And so I'm not sure it exactly hit the mark where we were looking for, but it certainly goes into discussion around risk management, and they've done an excellent job on managing risk. Their portfolio last March was was up 70 basis point in March last year. So they definitely know what they're doing, and it's really a risk management tool that they use.
Yeah, but the conversation, like you said, the guy's brilliant.
Yeah,
he knows what he's talking about, but super high level. So watch at your own risk.
Yeah.
All right. So what we got coming up? Just to let you know, if anybody had a question, put it in now.
Yeah.
Or raise your hand at the end. What's going on this week?
So just before we jump on that, just the deal flow is a lot slower this week. I know I've been talking, kind of giving some updates as companies been raising capital. It was quite a bit of a quieter week. Certainly still the small caps are coming to market. So those were, from a bond perspective, the only one I really saw of note this week was Bell Canada raised some money today in a 10-year and a 30-year note. That really was heavily oversubscribed, so lots of interest and demand in that. There's a couple of split shares that came to market too, but generally it was a pretty quiet week. The only, I guess, new issue of note was Roblox, not a Canadian issue, but Roblox, so for your kids and grandkids, started trading this week, and it was up 55% out of the gate. And I looked here, it closed at around $70 with when the new issue was a $45 issue started this week. So it'll be something to watch and pay attention to. I mean, Roblox is is a computer program site type where kids like to play and interact, and there's a lot of interest and demand around it, and I think that'll be something we'll discuss as things move on. So as for next week, I think next week we'll see how things progress at this point. This was a pretty big move in the U.S. 10-year Technology's been under pressure for the first time in many years. So this week will be important to pay attention and see, is this temporary, or are we truly in this phase transition? And you start to see some money kind of cycle out of the higher growthy tech names into maybe some of the more beaten down sectors. So, I've been talking about consumer discretionary for a while. So some of those names that we've owned, Under Armour, Capri, Sally Brands, like some of those names that, while they're up kind of 20-25%, they still, based on what I think can happen, they still have probably 30-40-50% upside. So as you start to see some of the, we'll say, hot money chase into those names, it might be the signal that we are hitting the back half of this kind of growth plus inflation number, and we'll continue to position for that. But I also start to think about, okay, when do we start to add bonds back in more aggressively? When do we look at the precious metals? Because the precious metals companies are down. Some of them are down 30-50% from last summer, where we sold a big chunk of them. So those are the things I think about as we move into next week.
Gotcha. Okay. Anybody, it's question time. Anybody have a question for Mr. Ben? No? Okay.
Yeah.
Don't see any.
No, I don't think so.
Okay, perfect. All right, well, that's it for us for this week. I think, yeah, be a similar week next week, just grinding away over here. Of course, if ever you need anything, just shoot us an email, give us a call, book an appointment if you want something more formal with Ben. The appointments, just if you don't know, you can find at the bottom of his email signature. If you don't have that, just email us and we'll get you an appointment for sure.
Yeah.
Cool. Okay, that's it.
Awesome.
Thanks, guys.
Excellent.
Have a great
All
weekend.
right.
We'll see you next
Thanks.
week.
All right. Take care.
Bye now.
Bye.